Yeah, hello everyone. In this particular work or presentation, we're looking at adjustment that are made in the income statement, and in particular looking at rent. So this one we're looking at from the point of view that we're required to prepare the income statement. Then there is an adjustment for rent inside the income statement. Right, you're given the following. You're given a pre-adjusted trial balance right on 28 February 2018. That means that's the end of the financial year. The rent income in the trial balance is 176,818. Then adjustment for rent income is after you're given the trial balance, then there's rent income at the trial balance. Then after the trial balance, there will be adjustment. So in this particular instance, the adjustment in trial balance for rent, the tenant has paid rent until 31 March 2018. Rent increased by 10% on 31 December 2017. Right, so what we need to calculate is the adjustment, how much are we going to adjust rent for. We received rent in advance. Remember the matching concept. We need to match the current income to current expenses. So part of the income that we receive for rent is for the next financial year, so we need to remove it from the 176,880. So the rent received, it's 176,880, which is for 13 months. Remember, we received rent for March 2018 and the year ends on received rent for March 2018 and the year ends on 28 February 2018, so there's an extra month there, right? And the rent increased by 10%. So are you wondering why can't you divide 13 into 176 to get rent for March that was received in advance? We can't do that because rent at some point increased by 10%. If we divide that, we assume that the rent was even from the first month up to month 13, which is not correct because it increased. So this is how we work it out, right? Before rent increase, it was 100%. And how many months are those, right? From March 2017 to November 2017, that will be 9 months, which gives you 900. Then after the increment, the rent will be 110% times from December to March, right? 2018, December 27 to March 2018, that will be 4 months. And just make sure the total here is the same as the total here, right? This is equal to 440, right? That's 440, then gives you a total of 1,340, if I'm correct. Yeah. Right. Then what we are concerned about is this amount here. Right, that's the amount that we are concerned about. That's what we want to calculate. That's where the adjustment is. That's where the extra month received is, because we need to remove it. So we want the total amount of rent that was paid, that was received after the increment, so that we can find that extra amount that was received. Right, so what we need to do now is it's 440 divided by the total 1,340 times the total rent received 176,818. Right, then this gives you, that's 440 divided by 1,340 times 176,880. This will give you 58,080. Right, so this is for 4 months. This is for 4 months, and we need only the monthly rental income. So for us to get monthly rental income received, that will be 580 divided by 4. This will give you 14,520. Right, so that's the amount. That's what amount of rent that we're receiving is from December. That was the monthly rent income that we're receiving from December. Since we only have 1 month that is basically received in advance, we just have to deduct that 1 month rental income after increment. So this will be like this in your income statement. It will be other incomes, right? Then rent income, that's 176,880 minus 14,520. Then this will give you 176,880. This will give you 162,316. Then we have other incomes. Maybe you have commission income, maybe it is an adjustment, provincial bad debts. Then we have other incomes that follow, but these are just for rent, right? Because you need to remove this particular month because it was received in advance. 1 month was received in advance from March. It's for the next coming year. And this part of the rent income that you remove from other incomes, this will form part of your income received in advance in your other payables, right? Form part of other payables, current liabilities, right? Income received in advance.